Okay, so today we're going to be going over this precious metal that is up 76% in less than 1 month. This is a ruthenium analysis. So what is ruthenium? So ruthenium is one of the platinum group metals. It's produced as a byproduct of mining platinum group metals, which are typically platinum, palladium, and rhodium are the main ones. It has very inelastic supply, and it also seems to have relatively inelastic demand. And these platinum group metals in general are subject to extreme price volatility, and ruthenium is showing that right now. So what are the uses for ruthenium? Many new uses for ruthenium are emerging. Most of it is used in electronics industry for chip resistors and electronic contacts. Ruthenium oxide is used in the chemical industry to coat the anodes of electrochemical cells for chlorine production. Ruthenium is also used in catalysts for ammonia and acetic acid production. Ruthenium compounds can be used in solar cells, which turn light energy into electric energy. Ruthenium is also one of the most effective hardeners for platinum and palladium, and it is alloyed with these metals to make electronic contacts for severe wear resistance. It is used in some jewelry as an alloy with platinum. So if you kind of look at these uses, it seems like the uses are relatively small amounts needed. So I'd guess that and because it's just a very unique metal, that demand for it is relatively inelastic. Here's our demand chart. I wasn't able to get the side axis on it, but it's right around 1.1 million ounces a year, and I'm guessing that relatively lines up with the supply chart as well. And demand seems pretty stable going back the last 10 years. So ruthenium coins. So you'll see sometimes coins that are ruthenium plated, and that's basically this black plate here around, and this is a 24 karat gold plate, and this is actually a silver coin. So you can't really buy these coins because it's really just a silver coin with a ruthenium plating, and then they'll really be at like 100 or 200% markup to spot price for silver. So they're artistic in nature, but I wouldn't recommend them for investment. So relative valuation. So here's our 2021 precious metals relative valuation. Just updated this. And I've done this in the past videos, but platinum's the cheapest. Silver, gold are next cheapest. Palladium's right in the middle. Ruthenium, then iridium, and then rhodium. So ruthenium was previously at the 4th position, but now that it's gone up 76% in the last month, it took over the palladium position. So 1 month price action. So we have the chart here. So if we go back to May 1st, which is right around here, the price was $440 per ounce. And then here we have May 22nd. It was $775 an ounce. And it hadn't even fully updated in the chart here. Yeah, like the price would really be up here. So absolutely astronomical rise in just 3 weeks. And I don't even know why it's happened. It just, like these platinum group metals is just, because supply is so fixed, it's like any kind of spike in demand can just drive the price up dramatically. So here we have the 6-month chart. Same kind of thing. Which from January 1st, we're at $270. And now again, at the May 22nd, we're at $775. So that's 187% year-to-date increase. Pretty phenomenal. If we look at the 5 years, so this was actually kind of at the bottom of the bear market for platinum group metals in general. So if we go back to January 1st, 2016, the price was $42 per ounce. Currently, again, $775 per ounce. So this was a 1,745% rise in just the period of 5 years, which is stunning. So we go to our 16-year action. We can see here back in 2006 to 2007, we had this massive spike, and it got up to a high of $850 per ounce on March 1st, 2007. And it had run from March 1st of 2005 at $55 an ounce. So in that 2-year time period, it went with a 1,445% rise in just 2 years. So that's pretty phenomenal. But then also, basically, if we go from this March 1st, 2007 high of 850, and we go to the low, which was in February 1st of 2017. So basically 10 years, and it's gone down by 95%. So to me, this is kind of indicator of the commodity cycle. And here we had quite a huge commodity cycle, upcycle from about 2000 to 2008, 2007, somewhere in there. And so we just seen this massive super cycle. And everybody's expecting it to continue, but for whatever reason, it really pulled back and we had a lot of these commodities retreat. And that might have been the prices had stimulated increased supply and stuff like that. Tough to say. But now it looks like we're into another commodity super cycle, and this seems to be a bit more broad. It seems to be impacting lots of different areas. Like we're seeing it in lumber now, we're seeing it kind of like copper, oil, they both come back. And so I have a feeling that we're going into another 5 to 10 year mega like supermarket bull. Because if we go, it's like our 775 is right here. But you really have to kind of inflation adjust it, and then you think through all the money that's been printed by the central banks just over the COVID crisis, that it's like I really feel like these metals have a lot of space to go. So here I have a ruthenium divided by Dow Jones chart. So this is my own data, and I could only go back to 1992 for ruthenium prices. And we see that there's quite a bit of volatility here just in this one price spike. It would be nicer to have a 100-year chart, but that's just not available. So we're still, if you look at in comparison to Dow Jones, we're not even close to the previous spike. We still have probably about 2 or 3 times to go. So if we were going to do ruthenium in today's prices and compare it to Dow Jones, if we were to reach the high, it would have to go up to $1,920. So just under a 300% increase is what's kind of needed to go back to the previous high. But it's definitely relatively quite high. So we have ruthenium real estate. This is nearing the high. That just to me that says that the Dow Jones is a lot higher than real estate has been historically. And then we go over to how to profit from ruthenium. So it doesn't have an established coin market. There's a few options in the past to buy like 1 ounce ingots of ruthenium, but most of them seem to be sold out, and it seems pretty illiquid right now. You couldn't really find any place to buy it, and I don't really even know where you'd sell it. So probably buying the metal itself isn't the best kind of option right now. But I do think in the future that there is a possibility that like all these platinum group metals could actually create their own coin demand, just because it's like if gold and silver, platinum and palladium all make sense as coins, it's like why can't these other metals do the same thing and kind of create unique niche markets for it? So the only real way to currently profit from ruthenium is to invest in the major PGM producers. Impala Platinum produces roughly 300,000 ounces of ruthenium a year. Even at today's high prices, that would only account for 2% of Impala's projected revenue. But Impala is extremely profitable in general right now, and I project that this $14 billion company will make, I'm not sure if it's $10 billion, I'll have to go down to my numbers and check that again. But it's basically, it's already an extremely profitable company, and it's like if the ruthenium price triples again from here or something like that, it's just going to add a few more percent to their revenue that they're making more money. But they're already fantastic, and they're extremely cheap relative to the profits that they're looking to make. And I believe that these high platinum group metals prices could last for 5, 10, 15 years, because that's really how long it could take for new mine supply to come online. It's like these projects there's not very many of them. Most of them are located in South Africa. And it takes a lot for these mines to actually be developed. So there's no kind of impending new supply coming. And I think that's why the market's signaling it needs higher prices, is to stimulate stimulate production. So yeah, here we have Impala's earnings. So you look at it, nickel accounts for about 2.6% of their revenue. Platinum's about 15%, palladium 28%, rhodium, this is the massive driver, 47%. Gold, it's just a small piece of it. Right now it's about 1%. And ruthenium, it was about 1% accounting for the revenue. And basically now the price is basically doubled. It's up to 2%. And iridium is 4.38%. And iridium's gone from a massive jump in price as well over the past few months. I think in the start of the year it was around 1,400, and now it's 6,400. So it's these whole sectors of these platinum group metals have just been going nuts. And what a lot of people don't realize is that these platinum group metals are far more rare than gold or silver. but some of them are cheaper. You know what I mean? It's like ruthenium's half the price of gold, but it's vastly more rare. Like ruthenium's more rare than platinum, more rare than palladium, all that kind of stuff. It's not quite as rare as rhodium, but I feel like that can make for a good investment case. It's like, well, if these platinum group metals have the same kind of properties as gold and silver, except they're dramatically more rare, might that not be a better potential place to store my value? So I feel like there's definitely a potential that people could be entering the market from an investment perspective. So summary, platinum group metals are an extremely niche industry. They seem to have massive volatility to the upside and to the downside. So we saw that with our chart of the 16-year. It's like massive upside potential, but also massive downside potential. But I feel like we're in for a cycle of massive upside potential, and probably we wouldn't see a lot of downside pressure until about 2030 would be my guess. And that's kind of when we'd see new mines come on to supply and kind of people able to find other uses or reduce demand. So PGMs went through a vicious bear market from 2008 to 2016, and these PGM producers were losing profitability each year. Sibanye came in as a gold producer, and they basically consolidated a lot of these platinum group metals companies and mines. Like they bought 3 mines from Anglo American, they bought Lomon in 2019, they bought Stillwater in 2017, and I think they bought Aquarius Platinum as well in about 2015, 2016. So they took all these companies that weren't making money or weren't making a lot of money, bought them out in the low, and now they're profiting from like the dramatic rise in the prices. But in this time period, there was an investment into mines. It's like these companies were basically going out of business. So they weren't building new mines and creating excess capacity. So these new PGM mines in development, they're likely just to maintain current supply. Like Sibanye basically just greenlighted their K4 project, which was a project they bought from Lomon, and I think it's producing somewhere between 200 to 400,000 ounces, like 40 ounces a year. And they're basically like, yeah, it's going to take us about 3 to 4 years to get this project into production, and we don't expect this is going to increase our supply at all. We're basically just looking for this to keep our current levels of supply up, basically assuming that other mines are going to start to decline in production. So it's like, and they're one that I actually haven't seen Impala highlight or greenlight any new projects, and I don't think Anglo American has either. I'm not sure about that, but it's just I haven't gone deep enough into it. But there's not a lot of new platinum group metals mines that have been greenlighted yet. I definitely think that there's some that's going to be happening, but there's just not a lot of supply in general for this market. And Sibanye Stillwater actually predicts that the rhodium supply will decline by 14% over the next 5 years, just to decrease productivity. And I have a feeling that they're looking a lot to Anglo American actually to have like lower production going forward. So summary, I expect the PGM prices to remain high over the next 5 to 10 years and to stimulate the development of new mines. I expect PGM producers to remain profitable, extremely profitable in this time frame. And there's a possibility that the junior PGM projects get bid up to high premiums just because the major PGM producers got so much money, and it's like they're going to return a lot of it in dividends, but they're also going to be wanting to reinvest it into developing new projects. And ideally, they're going to be looking for projects outside of South Africa and probably Africa in general. It's just like these projects are going to carry a premium. There's a lot of political risk in building all your production in Africa, and they definitely, like I see Sibanye really liking having their Stillwater project, and I think it's North Dakota, and then Impala has their, I can't remember the name of it, but Northern Palladium deposit in Ontario, and it's actually pretty close to Generation Mining. I also expect the platinum price to outperform nearly all commodities, so I see this being a major benefit to the platinum group producers. So my kind of recommendation is to buy physical platinum just because it's the cheapest out of all the metals in a historical basis, and then also buy the PGM producers like Sibanye, Impala, and then maybe some of the juniors too, maybe like Platinum Group Metals Limited, which is PTM ticker on the Canadian Stock Exchange, as well as Generation Mining. So yeah, that's my summary for it. Thanks for watching.